Professor Karn back with you again to continue our accounting cycle from start to finish for the Walton Quality Automotive Company. And we're going to illustrate step 7, the closing process, and we have steps 7A, 7B, and 7C to complete here in this video. So let's do our closing entries first in the general journal. And remember, we have to close out our revenues, expenses, income summary, and withdrawals as part of the closing process. Okay, so remember they take place all at the end of the month. So we will put our year, and then we have 12/31. Okay, remember we close out revenues first. And remember that revenues have a credit balance. So in order to get to this account here to 0, this service revenue account to 0, I have to debit it for $16,600. So we'll go ahead and do that. And then remember to use our temporary account only in closing. The income summary account was what we will credit. So that effectively closes out our service revenue account to 0 and resets it for the next accounting period. Okay, then we close out all of our expenses in the next closing entry. Remember, we have to debit income summary. Now, we don't know the total amount of all expenses yet. We could probably find out pretty easily. Let's actually show you a way to do that. Go back to our income statement. And if you look at the income statement, you can see that we do have a total expense number of $8,480, and that's exactly the amount that we will have to debit. So let's put that in here and just kind of pause and talk about this for a moment. If you've done your financial statements already and done the step 6 in the proper order, you would have this total. Some people skip around and do closing entries before the financial statements, which I would probably caution you doing because you might make a mistake. The nice thing about doing the actual income statement first is that it should match up nicely with this step here when we do our first 3 closing entries, revenues, expenses, and income summary, because that's what we have to end up transferring to the owner's capital account, either the net income or the net loss that we found in step 6A. Okay, so then we have to credit each individual expense account, and we'll just go down the line here. Salaries expense, we will credit for $3,800. Then we will credit supplies expense in the amount of $1,000. Then we have rent expense, a credit of $1,300. And then we have advertising for $1,700. And then we have a couple more, 3 more, insurance expense in the amount of $300. We have depreciation expense for equipment for $150. We actually had 4 more, not 3 more earlier. We still have utilities expense in the amount of $180, and finally we have interest expense for $50. Now, the reason I kind of deviated away from the other format, just kind of basically looking at taking these in this particular order here, was the fact that I want to point something out here, and that is you have to be careful in my accounting lab about the instructions that you're given. Sometimes they want you to list them in descending order from highest to lowest, or from ascending order from from lowest to highest. So just be careful when you're looking at the My Accounting Lab instructions. Sometimes students don't see that, and they do this. They do it correctly, but they just fail to put them in the order that they wanted, as far as high to low or low to high. Okay, so that takes care of our second closing entry. Now let's go ahead over here, and I'm going to pause the video for a moment and post these transactions, and then come back to you, and then we'll be able to close out our income summary. Okay, we're back now, and you can take a look at the T accounts here in this tab step 7B here. And what I did was I posted all of the journal entries that we did for closing, the closing entries in step 7A so far, the first two. And I posted all of these things here. Now let's take a look and see what the impact was. So notice that service revenue, advertising expense, utilities expense, salaries expense, rent expense, supplies expense, depreciation expense, insurance expense, interest expense, all now have zero balances, and that was our goal. They are all reset for the next accounting period. Okay, so let's take a look at income summary now, and you can see that if you look at income summary right here, it has a credit balance, a credit posting from the first closing entry of $16,600, and then a debit entry posting for $8,480 for when we close out the expenses. So now we can see that we end up with a credit balance of $8,120, and remember that that represents net income. So now we have to go ahead and close that out. So let's go ahead and do that back in the journal. So we will go ahead, and if you look at 1231 here, obviously in order to close out a credit balance here, and I'm going to color code this green to keep the net income theme going here. We know it's net income. And let's go ahead and bold that too. Okay, so we have to close this out to get it to zero, we have to debit it. So let's go ahead and do that. So we're going to debit income summary for $8,120. And remember that we're going to have to credit, and in this case increase, the Walton capital account in the amount of $8,120. Okay, so let's go ahead and post that so we get income summary taken care of. So we have $8,120 there as a debit. So we'll go ahead and close this out, draw another line underneath here again. And now we can see that this will be zero. And let's go ahead and make sure that we can represent that and see that that is zero. We'll change it to this here to help us with that visual. Okay, so now income summary is now zero. All right, now we need to post the increase or credit to the owner's capital account. So we'll go up here and we'll put $8,120 there. So now we increase to capital account. Again, that was a closing entry that we just did. And then the last thing we have to do is to close out our withdrawals. Notice that we have a $4,000 withdrawals balance that we have to get rid of. So let's go ahead and do that. Move this down a little bit here. Okay, so on 1231, remember a withdrawal will cause owner's equity to decrease or the owner's capital account specifically to go down. So we have to debit Walton capital in the amount of $4,000, and to close out and zero out the withdrawals account, we will credit the Walton withdrawals for $4,000. Okay, so that's the last closing entry we have to do there. So let's post that and make sure that we see that we get everything properly done. So let's go ahead and put a debit here for $4,000 to the capital, a credit here to the withdrawals for $4,000. Notice now that this account will now be zeroed out here. And we've got the withdrawals account taken care of there. Okay. The last remaining thing we have to do when we think of this is just to make sure we have the proper balance of the owner's equity account. So let's go ahead and put a line here so we can balance that out. So let's go ahead here and see what happens. We're going to take the $55,000. We will add the $8,120. We will subtract out the $4,000. And notice that we get $59,120 And that number should ring a bell because remember that needs to be the ending balance in the statement of owner's equity. Let's take a look back at step 6C and step 6B and see how we did with that. So let's scroll down to this. Notice here, what do we have? Up 59,120 is the correct balance. We have this on the statement of owner's equity, and now in the actual T account, the balance is now correct and matching. Okay, so now the last thing we have to do is just do a very simplistic post-closing trial balance. Now, one thing that you want to remember here is that any account that has a zero balance you will not put there. So a lot of this will be pretty straightforward. This will be a lot shorter than our adjusted trial balance. Okay, so let's go ahead and work on that together here. So we'll go ahead and do our cash, 44,800. Again, all we're doing is just copying every account that has a balance in the asset, liability, owner, equity order as we've done in the past on any other trial balance. And we have accounts receivable. $2,600. Then we have office supplies in the amount of $1,000. Prepaid insurance in the amount of $1,200. Then we get to our three plant asset accounts. We have equipment, and that was a debit of $9,000. We have our contra asset account. Just so you know, I'll say it here. You can abbreviate accumulated depreciation A/D. That is fine. I keep meaning to bring that up, but I will talk about that now. So, and you could always in the future abbreviate accounts receivable A/R. I'll put that up here too. That is an acceptable abbreviation for that to save you a few seconds. Okay, and that has a credit balance of 150. Remember, it's a contra asset account. And then we get to land, our final asset, 16,000. Okay, so there's all of our assets. We keep, again, straight down the line. Then we hit accounts payable, all of our liabilities. And again, you could then also say that you could abbreviate this A/P. So now that we've been working with these accounts a little bit, you probably understand what's going on with this stuff. You can start using some abbreviations, and all three of those abbreviations, AR for accounts receivable, A/D for accumulated depreciation, and A/P for accounts payable, are all universally accepted. Then we have interest payable. And that was a credit balance of $50. And then the last, actually two more. We have unearned revenue, two more liabilities. Unearned revenue, a credit balance of $1,400, and then the long-term liability, notes payable, a credit balance of $12,000. Now, if you think about it, we would now go to owner's equity, but the only owner's equity account we have left, because the revenues, expenses, and withdrawals are all zero, is the owner's capital. So make sure you take the proper balance, the ending balance that we just calculated from our T accounts, credit balance of 59,120. All right, and then we can come here and see if we got this correct. So let's take a look. We'll add this up. And we get 74,600, and that is the correct total that we're looking for here. Again, if the amounts did not equal, there would be a mistake, and we have to go back and fix it. But we can go ahead here and draw a double line, and we have our correct answer to our post-closing trial balance. Okay, so that concludes the illustration for step 7, the closing process. That really completes the entire accounting cycle, all of the required steps that you must do. And we have one more video to go as far as a lecture and a combination illustration on how to do the optional step, which is called a worksheet.